Commercial papers. This is one of the most popular method of getting financed by many reputed banks and financial institutions to meet their short-term needs or to finance the receivables or to meet the financial requirements while undertaking a new project. So generally these commercial papers will have a shorter period of less than 1 year, and the rate of interest will be fixed at the time of issuing itself. So these commercial papers are one of the popular instruments both for financial institutions, banks and corporates, as well as for investors to invest their surplus funds. Commercial papers, as stated, are for shorter duration period of less than 1 year with a fixed rate of interest, and maturity will be less than 1 year, and it will be issued by the most reputed banks and companies only. Otherwise, people may, it is just like a commercial paper is just like a promissory note issued by the bank or company to promise to repay the amount received on maturity date along with interest mentioned in the certificate, just like it is a fixed deposit certificate or just like it is a promissory note. Generally, companies issuing commercial papers will pay higher rate of interest to attract the investors, and the rate of interest will be generally more than the bank deposit rate to attract the investors to purchase the commercial papers issued by the bank or these companies. Recently, our Reserve Bank of India has introduced standing deposit facility as a policy for a platform, a platform made available to banks which can park its surplus funds and earn a rate of interest at the rate of 3.75% compared to it is more than the reserve repo rate of 3.35%. So wherever the banks are having surplus funds, the banks can park their surplus funds in the form of commercial papers. So this is permitted by the Reserve Bank, so that the banks can earn interest on funds parked. The banks has parked nearly 1.18 lakh crores in one day itself in commercial papers through standing deposit facility. Within 3 days, it was 2.35 lakh crore from the date of starting of SDF, that is standing deposit facility. Generally, these commercial papers yield higher rates of interest than the regulatory windows, as the Reserve Bank will pay repo rate at the rate of 3.35%, but it will be 3.75% commercial papers, means it will be more than the reverse repo rate issued by the given by the Reserve Bank of India, and less than the bank's normal lending rate. It will be more than the deposit rate but less than normal lending rate. All such commercial papers issued by banks and reputed companies will be rated at A1 plus or A grade, considered as credit worth enough to invest. Means if the companies are rated as A1 plus or A, these companies only can issue commercial papers and attract the funds from investors, and that shows the rating of A1 plus A reflects the credit worthiness of the company or the bank which issues the commercial papers. So these commercial papers became one of the source for the banks to park their surplus funds and earn interest at the rate of 3.75, and also the duration is less than 1 year. Duration will be less than 1 year, shorter period, and also it will serve the purpose of the companies which are giving which are issuing commercial papers, and also the banks can earn interest on such parked funds. This is one of the facility allowed by the Reserve Bank of India in its new monetary policy.